I'm just going to cut to the secret sauce, so to speak, and what makes this so good.
So we're still at this very moment, we're at negative 7 billion, which is just shocking.
That's really big.
Yeah.
You know, like you can start to layer the reasons why you want to buy here. So if there's big strikes up here, I go, okay, there's a target. I never want to step in front of a longer dated call. Or that makes sense.
I think it went over my head, but I'm sure other people listening right now are like, yeah, I totally get it. Hello, everyone. Welcome to the stream. We are joined today once again by the one and only Brent Kochuba from SpotGamma. How's it going, Brent?
I'm doing really well. Thanks for having me.
So the first thing I want to do is I just want to kind of tell you, I've been using Trace. I pretty much exclusively use Trace. I'm a very slow learner. It takes me a while to absorb things. So I'm kind of just focusing on the one for now until I really feel like I have a concrete understanding of it. And I just want to give you the framework of how I'm seeing things, and you can tell me if I'm right or wrong, or maybe add some context to it.
Yeah.
So first and foremost, when I look at the gamma, generally I find if it looks like this right here, where it's kind of like it's light purple, maybe there's a little bit of bluish to it, but it's not really intensely strong, I don't really find that it has any effect on the market. Like I could have a trend day, I could have a balance day, I could have a large range, I could have a small range. But when it's like red, when the whole screen is red, we definitely have much bigger ranges, much larger moves. Does that seem right?
Yeah, I would agree with that. And it's all relative, right? So when you're saying there's purple and we could have a trend or we could have things can move around a little bit, that should happen in the context of a fairly average move, I would say, right? So like 50 bips to maybe 1% move kind of thing if you're seeing purple on that screen. And that should tie into that stability indicator at the top of your screen. Depending on what your settings are of the heat map itself, you may have a color scheme that makes purple much brighter than someone else's screen. So that stability gauge helps. And then the other thing is if you hover over the map, you'll see we give you a percentile. You see that 21st percentile?
Yeah.
So what that's telling you is that we have a pretty light amount of gamma at the moment. And so to your point again, if it's blue or purple, the point is that dealers are in a position where they are going to be buying dips and selling rips. Now, the more positive gamma you have, the brighter these colors are, the higher that stability is, then the tighter the ranges should be. So you are correct. And then when you have red, we call it a negative gamma stance. And what happens then is dealers are selling the market as it goes down and they're buying the market as it goes up. And that's where you get these really violent big swings like we saw over the last week, right? So you're right. And also the pockets of positive and negative gamma, red and purple on this map, also help you to set up your trades, right? On the map right now on the left, right, we have these big strikes. We were talking about this just before we came on. These are 0 DTE strikes. They're Captain Condor strikes, we like to call them. And what those are is a $5 wide put spread. There's stability at this strike. We call this the seek and destroy algo, which is like these big condor trades come in and the market will drive and tag those strikes. It's like I have to touch them. You see the market sold off pretty sharply today, but below that condor strike, the map has this shade of red below it. Do you see that to the right? Mm-hmm. Under the context, what we see right now is we move to this strike, we tag the strike, that's the day's business, and now we're likely to sort of move back higher, so we get this mean reversion. So what that means is over the context of the day, even though we're down, whatever it is right now, not a percent, I guess we're down about 50 bips, right? We could move back on the day, move back higher, and then when you look at the open to close change on the day, it's really not that much, right? So the intraday range may be a little bit wide, but close to close may be kind of tight due to this negative gamma dynamic.
Okay, so I do want to dial in a little bit on this seek and destroy thing because I have found this to be incredibly helpful. If I'm in a trade and the market is heading in the direction of one of these large nodes of gamma, it helps me to feel confident to stay in it. It'll probably get there, but it doesn't always get to them. Sometimes you have a really big, price or a really big, strike level, but then the market almost gets to it and then reverses and comes down. And what I have found is the thing that's helpful in that moment is if I look at the HIRO line. So a lot of times if the HIRO line changes and starts going down, we're not going to get to that seek and destroy level. Can you kind of explain what's going on there behind the scenes that makes that work like that?
Yeah, it's good to know. It's like horseshoes and hand grenades, right? So to your point, if you look at the way the market opened today, we opened at 67.40. And if you wind the trace map back to about 9:30, right? Go for, so you don't see, there's no position down there right now, right?
Correct, yeah.
At the 60, 680. So tick forward, one, there you go. Now that order came into the market. That's why suddenly you see those big bars, is the last set of big bars at the bottom. And I'm going to be honest with you, I don't fully understand the exact mechanics of who does this and why, but I understand what the flows are, and it seems to work with like this precision, like you set your watch to this happening. This is what the seek and destroy is.
I've witnessed that. It's very true.
Yeah. It was like Einstein, I think it was like the theory of relativity or something. It's like, we don't know exactly why it works, but it works.
Yeah.
And it's like somebody is selling a lot of deltas in the market, and they will continue to sell deltas till we hit the level, and then they stop. Let me start with Trace. Trace first is showing you what the dealer exposure is of hedge fund positioning. Okay, so big hedge fund, and this guy, in case this, oftentimes this guy Captain Condor, he'll put on a 15 or 20,000 lot Condor spread on a 0DTE basis, right? So Trace is showing you the dealer exposure of that. Then what HIRO shows you is every single time a trade takes place from anybody, a market maker, a bank, a hedge fund, whatever, we look at that trade and go, okay, we think they bought those contracts or they sold those contracts, and that's what HIRO is showing you. So if HIRO is going up, that means bullish order flow comes into the market. If HIRO is going down, that means bearish order flow is going into the market. And so that purple line to start the day, right, gapped lower, and then it's sort of flat, okay? So if that purple line goes down, that means somebody's coming in with bearish order flow. This is part of the seek and destroy algo. So the seek is, where is the biggest trade on the day? Where's the biggest position on the day? Now, at the moment, you look at those gamma bars and you say, well, there's a lot of bars that seem like they're the same size. But Charles, if you go to the top and click the GEX button there and then drop down, you can see net OI. So let's be explicit about what the position is. Now you see, there's the condor, right? The purple spread, very big spread, the blue bars there, that's the put leg. And if you hover over that, you can see how many contracts it is. It's about 8,000. And then all the way up there at the top, there's an equivalent position of call spreads. So this is what the condor is. So the seek and destroy algo comes and says, okay, we got to tag one of those two levels. And so the question is, which one are we going to tag? And this is where HIRO comes in. If you start to tick the map forward, you're going to see the HIRO line start to tank, right? And
there it goes.
That is telling me that we're going to go lower. That's where the pressure is building. Why? Because people are buying puts and selling calls. That's what's called negative delta flow or bearish order flow. And for you and me, what that means is bearish pressure in the market. And so I go, okay, big bearish pressure is coming into the market. On the right side, you can see that's billions of dollars notional is what that right y-axis is. And that's the HIRO axis. 500 million, not too big. 3 billion, especially over about 10, 15 minutes, that's a lot. So then I can immediately go, okay, what is the target? Well, the target is the biggest strikes on the day or the biggest position, which is very consistently this giant Captain Condor position, which is these strikes we're talking about. So if you continue to tick forward, you're going to see HIRO does not stop going down until we complete the objective, which is tagging that strike, right? So you can see the trend, like it doesn't stop, it doesn't stop, it doesn't stop, it's lower lows, and down we go. And then there's that candle wick there, right? And that candle wick in the S&P completes the objective, quote unquote. We tag that condor strike. It's like we completed the objective. Like now I can chill. And the way that you know we're going to chill and mean revert is that HIRO signal will stop making new lows, right? We're going to start to drift higher, and that means to me, number one is if I caught that short, I'm probably done for the day, right? In all likelihood, because we hit that strike. Now, what's my reason to hold a short? I don't really have one in the options 0DTE short dated landscape, right? Because we hit that strike, and now it's likely, I think, that the HIRO line just sort of either trends sideways or goes higher, and that means that the market either pins to here or glides a little bit, mean reverts a little, right? So that's the point, to your point, of watching HIRO.
So we're still at this very moment, we're at negative 7 billion, which is just shocking.
And that's really big.
Yeah.
Where things would be like, where I'd be like, didn't expect that, is if HIRO drops another 2-3 billion and we move down through that strike, which is that red zone on your chart there, which infers that dealers will have some selling to do. So, if that sort of happens, then I would look for another, 30 handles, maybe a downside. So, right now I would say, okay, Charles, you mentioned you were short coming in this. If you were, great. And I would sort of say, okay, like I would cover my short here, but I don't necessarily want to buy this dip yet because HIRO's not going up. If HIRO started to move higher, then I'm like, okay, people are coming in, they're closing their shorts, they're buying the dip, whatever. I'll ride that bounce back, right?
Yeah. Well, let's backtrack just a little bit. So first and foremost, let's rewind back to earlier in the day. Like you said, it's 10 o'clock in the morning, and I've got so much gamma at all these different levels that looks this pretty much the same to me as this one down here, this big one. So besides HIRO, is there any other way to kind of predict where it's going?
So at the top left, you have that strike plot zoom.
Yeah.
Yours is zoomed in a little bit. So move that all the way to the left. Keep going. There you go. So what this is doing is allowing the strikes to sort of be a little more relative to each other. Now, a quick note on gamma here, right? These are all 0DT contracts, and gamma is highest for at-the-money options, and gamma increases as we get closer to the end of the day, right? So what does that mean? That means at the open here, you're right. There's a bunch of strikes where you go, well, all this gamma looks pretty even across all these strikes. It's not terribly clear to me which way we're going to go. And so when I'm looking at this, I go, okay, I don't necessarily have an edge. I don't have a leaning direction based on the data that I'm seeing here, which is fine because as we just showed, it resolves pretty quickly when HIRO starts to drop. So if you just start to tick forward, you'll see all of a sudden you're going to see that HIRO drop, right? And then that gamma starts to increase at that downside strike. And keep in mind, you're at 67.20 right there, or 67.10, and that other strike is all the way down at 67.80. So there's still plenty of gap to the downside, right? It's not like you're saying like, okay, I'm going to jump in here and try to get 2-3 handles of downside.
Yeah.
In this case, there's a pretty big gap down there to that objective, so to speak.
So what if you don't have, a particular area with like this is your Captain Condor doing this? What if it's a day where he's not in the market and you have kind of relatively the same amount of gamma all over the place? Are we expecting more of a sideways day on those days?
Or a trend, to be honest with you. I think a lot of times what I'll do in those days is which way is HIRO going? Is HIRO trending higher? Is HIRO trending lower? Are people coming into single stocks in a meaningful way? I know you mentioned a lot of your community doesn't trade single stocks, but I got news for you. If people are buying Tesla, Apple, Amazon, Nvidia calls, market's probably going to go up, right? S&P is probably going to go up, and NASDAQ is probably going to go up because they're, in a lot of ways, the same index now, right? Like the top 38% of the S&P and the top 38% of the NASDAQ are essentially the same stocks.
Yeah.
So, it matters. And not only that point, I have a lot of traders that come in and go, I trade NASDAQ, and I'm like, you still have to watch S&P because S&P is like far and away the biggest index. And if S&P goes down 5%, NASDAQ is going down 5%.
Yeah, for sure.
Yes, you can have a bigger relative vol move one way or the other, but directionally they're almost always going to be the same, right? And I think that the S&P is always going to be sort of the determinant of market direction by and large. And so if you click off, right now you're only looking at 0DT, but if you turn off the 0DT button in the top left, there's not a lot of positions out there that are non-0DTE. And this happens a lot in this market where particularly when you have an event coming up, right? Like we have CPI in 2 days, we have FOMC in a week, we have the Asia Trump Z meeting. And a lot of times what happens in those markets is longer dated traders are kind of sit on the sidelines. They won't do that much. But if you're a 0DT trader, CPI doesn't matter to you, right? Because it's in 2 days. So it's like, I'm going to put a position on because of whatever's happening today. And those bigger positions, longer dated positions will back out a little bit. So what I'll do oftentimes is now go up to the 0DT and just toggle that back and forth, and you can see what I mean. The positions that disappear are the longer dated positions. So there are some there, but there's not a lot around where we're currently trading. If there is a big position, even if it's not 0DTE on the map, then I'll also reference that, right, for today's trading. Because if you have a big strike at 67.50 that expires in a week, well, that there still could be some hedging flows related to that, right? And I'll still monitor those flows.
I find that when I toggle back and forth between 0DTE and everything, it tends to kind of be the same major levels.
Yeah.
You know what I mean? So I have found I really only need to look at 0DTE for intraday trades. You know what I mean?
Yeah, and I would not push back against that. I think you always want to know what the other positions are. So it's like reference them every once in a while and make sure you didn't see something. Because here's an interesting thing to point out, right? Like let's say that over the next hour, all of a sudden a bunch of longer dated puts come in, right? Meaning you start to see a whole bunch of red bars show up on our strike plot around the 6,600 area. That means that people are buying non-zero DT puts. I'm going to be pretty nervous that the market could fall apart over the next few days because those positions are coming on, right? Same thing with calls. What if everyone starts buying a ton of calls that expire in December right now, right? And the market starts to lift. If I know those are December calls being bought, those positions are going to be there tomorrow, and that means that there's these hedging flows that could persist in time. Whereas with zero DTE, whatever's in play today is gone tomorrow, right? So if we sell off strongly today because of zero DTE put buying, guess what? I'm not going to think that that sticks tomorrow because that flow is not going to be there necessarily. Like, you got to worry about the reversion. So on that point, one of the things that I will always check is HIRO, and I'm always watching, is the flow longer dated, shorter dated, zero DTE only? Like, what is the kind of complexion of the order flow? Because I think that's very informative. If we get a big move up or down and it's zero DTE driven, I'm almost always going to want to fade that because it's this kind of like rush of, again, today's order flow. It's like whatever it is today that was all that matters. I never want to step in front of a longer dated call or put buy, right? Because again, that infers that someone has an axe. They're not trying to say, I'm putting this trade on for today. It changes the dealer's exposure out in time. So I'm always a lot more weary of fading a move, right, that's non-zero DTE driven.
Very cool. Okay. The last thing I wanted to mention is delta pressure. And, you know, I keep it very simple, which is like, you know, blue below price is support, red above is resistance. But one thing I've noticed and I want to ask you about is it seems like a lot of times as we get to those areas where there might be a color right now, like it might be red above right now, it tends to kind of turn to black by the time we get there. Is there anything I should make of that? Should I still assume it will be resistance, or does that not matter at that point?
It's a fantastic question. So the map color changing is a function of positions changing. And so you do want to be cognizant of that, and I think it's important. You know, if you wanted to buy this dip right now, you would love to see that giant layer of purple kind of like being right at where the market is right now. Like you would love to have a very vibrant purple map, right, that would say, okay, there's big buying support here. And the fact that it's still blue, and I think we should bounce at the strike, and HIRO is kind of trending sideways still, like we haven't, you know, I would love to see HIRO spike. So if I see the delta as even light blue and HIRO's going up, then I'm like, okay, I feel pretty good about buying this dip right now, right? So I use those things kind of in conjunction with each other. As long as it's like consistent color, meaning it's consistently blue and doesn't go blue to red, then I think, you know, even on a relative basis, you know, it's horseshoes and hand grenades, right? Like dealers are buyers here. HIRO's not going down anymore, so no one else is kind of selling. I have the reason to think the market bounces because we did the seek and destroy thing. So, you know, like you can start to layer the reasons why you want to buy here. There's no guarantees here, but you can, the data starts to stack up in your favor, right? Okay. But obviously you would love to have a darker, more vibrant blue color here or purple color here to say like, okay, super strong support. There will be times where this whole map will be blue above. And if you see that blue above and you see HIRO going, it's a trend day, right? Like I'm just going to ride the trend. I don't have a reason to not ride this trend. Like why am I going to fight the flow? Exactly. Yeah. And that's the kind of way, you know, you would sort of look at it. And on that point, like you look at the map here, it's sort of, you see, it just turned blue. See that just updated. Yeah. Yep. And HIRO jumped as well. So you start to see that support coming in now. And we're going to be talking here for another 15 minutes. So hopefully the market rallies a bunch and I look like a HIRO as opposed to the market kind of,
yeah, we'll come back and check
itself,
on it.
And then you just see me go black. Sorry.
Yeah. I had a few questions from the audience I wanted to ask you.
Yeah, I'd love to hear those.
Since you don't have a trace chart for NDX, how can an NQ trader use SpotGamma?
That's a great question. So number one, we all know that the Qs in the NASDAQ, the ES and the NASDAQ, they trade relative to each other, right? So if the S&P bounces, usually the NASDAQ bounces as well. So I think you have to be aware of the search and destroy, even if you're a NASDAQ trader. So that's kind of number one. Number two is if you go to HIRO, the thing that you want to be aware of when you're trading the NASDAQ is the QQQ order flow is going to be much bigger 90% of the time than the NDX. So even though the NDX has a bigger notional value in a contract, it just doesn't trade anywhere near as much as the Qs, right? So if you look in HIRO, you'll see the NASDAQ symbol, which combines all the order flow from the NDX options and all the flow from the Qs. And so what you get from that then is an understanding of exactly whether people are buying and selling calls and puts in the NASDAQ itself, right? So this helps to give you the directional lean. And so when I look at this, for example, this purple line right now has a big gap between zero DTE, which is teal, and all expiration flow. So this is rather bearish, right? When I look at this and you go, okay, is 1.3 billion in order flow a lot? Well, the 90-day range is minus 5 billion to positive basically 3 billion. So 1.3 is like, it's all right, right? Okay, this is mildly bearish, I would say, and it's not zero DTE order flow. So this is not the best look, right, for the way that the NASDAQ is going. It's a mild bearish pressure that I think is important to understand. That's the context, right? So once you do that, then you can also look at the equity flow. Okay, everyone's selling, tons of single stock options, which is really important if you're trading the NASDAQ, because again, if Tesla and Nvidia are going down, NASDAQ is probably going down too, right? And the last thing I would say just on Trace is that we would love to bring up a NASDAQ Trace. The data is just not quite available yet from the vendors that we need. And so as soon as that availability is there, we'll be the first to roll out, an update to this. But watching S&P, I think, is really instructive or helpful for even the NASDAQ traders.
Awesome. So next question from the audience. Market maker hedging is very strong at expiration. I've seen 1 cent options go to $31 from 3:55 to 4 p.m. Is there a way to capitalize on using whether a market maker is net short or net long, puts or in calls, and any other information needed like charm values so that I can make good decisions instead of just being a total gambler?
Yeah. So a couple of things on that. Number one is, when you're looking at the map here, right, and you're on the 0DT space, if there is big gamma bars or big open interest at strikes that you see, right? So, in this case, you can see the wick here shows us that gamma was quite high for an option up at 67.35, for example, right? A lot of these positions look like they're closed. So I always want to check OI to see, are these things closed? Like a lot of these calls are closed. But let's just say, for example, that you see a ton of big gamma positions up here at 67.20 as a reference. And that gives me the understanding that we have potential or a reason to move up to that area, right? Because there are those positions. And so from 3 o'clock to 4 o'clock or 3:30 to 4 o'clock, I always look and think, okay, if there's positions there, then there's the potential for the market to move there based on this positioning. So that's the one way I would look at it. Right now, there's no positions. I go, I don't think so. Second one is HIRO moving a lot up or down? In this case, when I'm looking at the map, right, what's interesting to me, if I look at gamma, or you could do this on charm too, is there's a lot of red up here. You see that? Like there's a blue right here, but let's just say this whole map was red and I had some big strikes up here. Okay. Red means dealers have to buy the market when the market is rallying, right? It's negative gamma position they have to chase. So if there's big strikes up here, I go, okay, there's a target, and I could structure 0DT call flies or call spreads, or maybe if it's 345, I just buy the nickel call or whatever it is. Because I see these big strikes up here, and I see negative gamma between, and if HIRO starts to move up, then I go, okay, this is one of those situations where we could have a big gap and move up to that level. Those are the things to be cognizant of. The opposite side of that would be, imagine that there's just giant blue strikes piled all the way around here, right, on both sides. In that case, I go, there's so much positioning staggered all around here that the market's got nowhere to go, excuse me. I don't have a good reason to buy an out-of-the-money option for 0DT with half an hour left if there's just stacked positioning all around where I'm at, right? Because everything's just pancaked in like a straitjacket. So I want to see that negative gamma. I want to see a big strike way above or below that I can anchor to or structure a position around. And then I want to see, the HIRO start to shove me one way or the other. There's been times where there's a big position above and below, and they're like 10-cent options above and below, and I'll just buy both because it's like I don't know which way, but I feel like there could be a lot of volatility. So I'll just buy the put and the call, for some really what I think is a really cheap price, just because I think the market can make a big move based on the positioning I see.
Yeah, and then if it makes a big move, the one that wins pays for the one that lost. Yeah,
exactly.
Smart.
Yep.
Okay, so the last question I'll ask you from the audience, which you kind of already covered, but it's just a good one to ask. He says, there's a lot to learn about SpotGamma. For a newbie, what are the most critical things to focus on to start?
Yeah, I would not worry about exactly understanding the dynamics that's necessarily behind the scenes. So it's like, if HIRO is going down, for example, and I say negative deltas, and people go, what's delta? If the HIRO is going down, it's bearish. If it's going up, it's bullish. Like, you're a trader, that makes sense to you, right? These are target levels, support and resistance levels. That's it, right? The map, red bad, blue good. So anyone who trades can understand that. And as you start to get your feet wet and you want to know kind of the narrative or the dynamics behind it, you can start to fill that in after. And so, that's to me, the critical thing. It's like, you don't need to know that people are selling puts and buying calls, right, to make HIRO go up. And what does all that mean from the hedging flow and how much they have to buy? It's like, That's a lot to sort of digest. But if line goes down, right, that's selling pressure. Line goes up, that's buying pressure. And then you have your support and resistance zones. You can break it down like that. And again, anyone who's trading, anyone's part of your community is for sure going to understand that. And if you don't understand sort of like support and resistance,
yeah, you got a long way to go.
Yeah, you have some other things to learn first.
Sure.
We have a product launch coming up, and we have an open house, and so everyone in your community is going to be able to join our open house next week and try all these tools out. This is our updated HIRO indicator, and what I want to show everybody here is HIRO's been around for a couple years, but we just launched a brand new chart package. That's what you're seeing here. There's this price line, right? And it's this purple line is the S&P price. The purple candlestick is all expiration order flow. And then the teal line is 0 DTE only. Does that make sense?
Yeah.
So HIRO for just 0 DTE options, and purple is all expiration. So the trend of these two, like after this opening gap, because someone bought longer dated puts, the opening gap or the relative distance between these positions hasn't really changed over the course of the day.
Yeah.
And what that means to me is that it's been mainly a 0 DTE market after the open. So that is always important. Let me show you yesterday, just to give you an example. This is yesterday's order flow. You can see the gap between 0 DTE and all expiration flow. It didn't change over the entire day. It's like yesterday was pure 0 DTE trading. It's like it didn't change whatsoever. So what's interesting to me about today is somebody came in today and put in a pretty big negative delta order, and that seemed to get the ball started for a little bit of bearish pressure. And then after that, it's mainly been 0 DTE flow. So I'm watching this. I'm cognizant of it. But again, it's like, okay, bearish order flow to start the day. But if the spread between these two is widening meaningful, meaning all expiration flow and 0 DT, I'm going to get more worried about long-term selling pressure in the market, right? And then I mentioned S&P equities. So look at the equity order flow here. It's very negative, minus $3 billion. And this means that Tesla, Apple, Nvidia, it's all seeing very negative pressure on the market. There are times where people are buying so much Tesla, Apple, Nvidia calls that the whole market's just ripping on that dynamic alone. Right, so you got to be aware of that, even if you're not trading those single stocks. Those single stocks are so big now that it matters. See this giant move down here in the market? Somebody slammed on a bunch of some kind of single stock puts or calls, right? That's why this candle's so big, and we go from negative 2.7 billion to negative 3 billion in single stocks. So I know someone put on a really biggish stock, bearish like single stock trade that likely chunked the market down right there. Does that make sense?
Yeah, absolutely. And I see that you guys are now using trading view charts. So can they
That's right.
put the other indicators that they would normally use on trading view on this same chart?
You can. It has a ton of different indicators. We want to open PineScript eventually as well, so you could run PineScript. But what's cool about this is then you could put moving averages on the HIRO order flow, for example, and see when trend is really changing in those. But you can see there's a really big list of indicators on here that you can add and either put those on the stock themselves, right, like VWAP, or put on the HIRO flow themselves. So one of the things I always want to do is be able to sort of like put a moving average on the HIRO order flow to make it a little bit easier to track, right? The second one is we have this scanner tool, and I know a lot of people in your community are shorter term traders, meaning intraday. But if you're trading options and you have a 5-day window or even up to a 30-day window, this can be really interesting. Also an interesting idea for when a trend is going to change. Like we've been talking a lot about gold and how gold was just super overbought. So what the compass does is it shows you whether where call prices are expensive relative to puts. So the more on the right side of this chart, call prices are more expensive relative to puts. And also, does the stock have a very high implied vol or low implied vol? Determines whether we're high on this axis or low. So for example, Intel and earnings, calls are pretty expensive and there's pretty high implied vol. So people are really bulled up on Intel, and it's like, well, do I want to fade that, for example? And gold, interestingly, now puts are really expensive, right? Whereas in the Qs, calls seem cheap because we're on the bottom left of this window, right? Okay. So this is a tool we've had for a while, but we just added was a history. So I can come in here now, and this is going to be a little wild. So let me just narrow down. So here's just fewer symbols in my watch list. But now I can add a 10-day history. And what's cool about this trail is it shows you exactly how the names have moved the last 10 days. So did something go from very bearish to very bullish? So for example, look at SMH, right? 10 days ago on the 13th, people were buying a lot of calls. Then people were buying a ton of calls. And then all of a sudden, the complexion of this changed really rapidly. So this allows you to see what the path is over the last 10 days of bullishness or bearishness in a relative asset or a stock, which to me is really helpful, because when you understand that path, then maybe you know, okay, gold is getting more bearish over these days versus, okay, gold is getting less bearish and kind of like starting to come down. Does that make sense?
Okay, yeah. I never thought about using it that way. I was thinking about it more in just figuring out, am I getting a good deal by buying calls right now or puts or whatever? But you're saying you can see a bias for the move based on the changes in the options.
100%. And, you know, did a move happen, you know, gradually, or has been a simmer? So if you look at gold, for example, over the last 10 days, gold made an all-time, I believe it was an all-time high, right?
Yeah,
It was up 20%. I mean, it was an insane rally. Like, I think it was a fresh all-time high, you know, a couple of days ago. That's why I was pausing on that. What's funny to me about gold, and we were talking about this, is normally you would see extremely high implied vol and rich put prices, which is what this is showing, when a stock or an asset has crashed, right? But we were seeing really high put prices into the all-time highs, which to me signaled people probably own gold, right? Like, you got a bunker in your backyard or whatever, and
Sure.
you're buying puts because you're
Don't
like,
we
this
all?
thing just keeps going up. Yeah. Where do you live, Charles? And so that tells me that gold is actually like well hedged, even though the implied vol is very rich. And so we were structuring a lot of trades, and we're talking about a lot this in recent notes about, if you want to short gold here, buy puts in gold, you got to be aware of this dynamic, right? Because if gold comes down, implied vol is likely to come down as well, right? And that means the puts that you buy are going to be taxed in a way that is atypical. You know, that's how this, I think, can help you navigate that path a little bit, right? Whereas, you know, had we been down here and moved to the top right and calls were just extremely rich, right, then I would probably look at ways of shorting gold, you know, look at different ways of shorting gold if it's rich puts versus rich calls, if that makes sense.
I think it went over my head, but I'm sure other people listening right now are like, yeah, I totally get it.
Well, here's like another thing, right? We're all worried about, or at least I'm worried about, like, okay, the market is a little bit weak here today, right? But what happens if, you know, CPI is a no Brent, nothing done, Powell's like, hey guys, like, more rate cuts, don't worry about it, and then Trump sees shake hands, and then, like, I don't know, let's just make the most bullish case scenario ever, like, government shutdown is over, like, Ukraine war goes away, and like all of a sudden it's like, all those things are possible in the next 2-3 weeks, and you have the seasonal rally. It's like, you could make a case, and I'm not giving investment advice here, but you can make a case that we have a big Santa Claus rally, right?
Okay.
So it's like, well, how do I hedge that tail if I'm really worried about it? I want to find the assets that are sort of cheapest on this map over here, right? So the bottom left is going to tell me the stocks that have the lowest implied vol. So the options are cheapest when they have lowest implied vol. And then if they're more to the left on this chart, that means that puts are rich relative to calls. So what that essentially is telling me is that no one really wants calls in these situations. If you look at TLTs, for example, they're getting more bullish as in the bid into longer term treasuries is getting kind of more bullish or more entrenched, right, over the last 10 days. So am I less likely to want to fade that because that's a trend that's building versus nobody's wanted Qs or spiders now for what seems like a week, right, or the last 10 days because they've hung out down in this corner. So I think that when I'm trying to pick an asset and I'm thinking, okay, is there regime change here, which is what this is maybe signaling in TLTs versus Qs, or is there a lot of noise where the asset's flickering around? Like SMH just continues to be moving all over, particularly with earnings, right? I think that's going to be even more sensitive. So there's less maybe stability in that SMH signal versus like, it just seems like Qs have been cheap. And so if I want to hedge my right tail, I see implied vol pretty cheap, and we're in the bottom left quadrant here. Qs make sense to play an end of year rally, and I can isolate that risk of a right tail or a big market rally with some QQQ or spider call spreads based on what I'm seeing in this data right now.
Okay.
So this is brand new, the trail, and so we're very excited about that. The other thing is, for those of you who are in the VIX or look at implied vols a lot, we added a VIX term structure chart. So this is now the VIX index versus where the futures are trading. So you can know how steep or cheap or rich the term structure here is in the VIX space. You can use this to compare how traders are positioned in the VIX space versus VIX futures and VIX index now, and look at how this compares over historical time frames. So this can be very helpful when assessing, again, are we sort of like, is there too much fear or not enough fear in the market, for example? And then last but certainly not least, one of the things that I'm really excited about is this is our new options calculator. And so What's different about our calculator than a lot of the calculators you see out there is that this probably looks relatively familiar to relative to some other calculators are in the space, but I'm just going to cut to the secret sauce, so to speak, and what makes this so good. Number one is you can come in here and you can change your implied vol settings. Okay, let's look at Intel, right? Because Intel is going to report tomorrow, so let's just check that out real quick. So Intel is high implied vol, and calls are bid up relative to puts, and earnings are going to report. So why does that matter to me? And when I'm looking to design a trade in Intel, it's because the way that volatility shifts after earnings is going to dictate whether or not my strategy was successful. Sometimes you can buy a put and a stock can go down, but you still don't make money, for example. Or you buy calls, but you pay too much for those calls. So even though Intel goes higher, you still lose money. And it's because of the dynamics of implied vol. So what's cool about this, and I'm cutting to the chase on this, is when you come in here, you can see the current implied vol for the 11/21 options for just Intel, right? Just for this expiration. And what I can do is I can say, okay, I know earnings are coming in, so implied vol is likely to come down, so I can reduce implied vol. So now I've adjusted the implied vol for this option to this red line here, right? So I've reduced vol. So when I come in now and I calculate my P&L on a 37 strike call, now I can see the difference in P&L. See if I hover over this, the IV adjusted P&L shows me that I'm going to lose money after earnings because implied vol is going to get crushed. And so rather than making $23 if Intel goes up to $39, I'm probably going to lose $4 because implied vol came out in this scenario. Does that make sense?
Yeah. So let me try to explain that again in a way that would make more sense to me, I think. So you're saying
probably make more sense to everybody if you explain it.
So it's like you might be right about the direction that the market is going to go. But because so many people are making bets before the earnings call, as opposed to taking off those bets after the earnings call, purely that change in the amount of people making bets means you won't make any money and you may even lose it. And this is allowing you to visually see that by predicting that the implied volatility is going to change after the earnings come out.
That's exactly right. And we know the earnings is going to change the vol, right? Because it's the event. Implied vol almost always, nothing's always, but 90% of the time, implied vol decreases after earnings. So the dashed yellow line there is my P&L if the vol doesn't change. That's basically what the market current prices are, right? But we know implied vol is going to change because of earnings. So in this case, then you can see how your P&L, is affected by that likely volatility change. Now, in this case, I'm the one setting the implied vol, so I can move this around and change the prospective P&L. We have some other tools that can help you set up the guidelines here. But the other part of this that is so critical is, remember in the scanner chart, I showed you how we're at the top right of the chart where calls are also bid up, right? So call prices, we call this a rich call skew, right? Call prices in particular are bid up because people are so bullish on Intel because NVIDIA or OpenAI or government, whatever it is, right?
Sure.
So we can actually adjust the skew now. And so what that means, and I'm going to adjust an skew in an extreme method so you see, now this line flattens out. Do you see that? So I can raise this up or move this down, which is a dynamic that I've never seen in another calculator. And on a daily basis, on a normal name, this change in skew probably doesn't matter all that much. But when you go and you're going to trade gold, like gold is moving, or Intel before earnings, or we were talking about Tesla because people are not that bulled up on Tesla actually, and call skew in Tesla seems a little bit low. So you could have a situation where Tesla has great earnings and people start to run into calls, so that call skew steepens. So actually the implied vol increases for the calls that I bought. So then when you say, okay, well then how does that affect my P&L? So the ability to change that skew is a often missed dynamic that can again be the difference between you making money in the option space. And so the ability for you to adjust this again is the critical differentiator here. There's a ton of cool things that you can do with this: save positions, look for new positions, scan for new trades, all sorts of things. And so we're really excited to launch that. And on that point, if you go here, spotgamma.com/hidden forces, and Charles, I know there's a link specific for your community here.
In the
we're going to be giving everyone an open house, yeah. And so you use Charles' links to get to this. Once you sign up, you'll get, again, access to try all the stuff out for free. Proof is in the pudding, whether it's not, it's useful to you. And so Trace, HIRO, the whole thing, you'll be able to try it all out and get access to these tools to see just how much they're helping your P&L and adding alpha, right? Because that's what this is all about.
Yeah. And I will just also add to that, for people that might be watching this right now and feeling a little bit overwhelmed, you guys do a great job of constantly putting out ways to learn about this. I was telling one of your associates earlier, it's like, I literally can't even keep up. Like, you send out so many emails where like you'll do a Q&A and you'll answer people's questions and they'll send out an email with all the answers that you gave. And there's just so much constant, education coming at you that it's almost too much. But if people feel like they're not going to understand, like, okay, cool, I can program my skew. And it's like, I don't even know what any of this is. It's like, sign up and you'll absorb the information a little bit at a time, over time, slowly. You know what I mean?
We have people who this is all they want. They want trace, and that is the only thing they really care about. And I could launch a starship from a button on here, and they're like, I don't care, I'm watching this. But the alpha's in there for them, right? It gives them the signal that justifies, being a member of SpotGamma. And then along the way, they're like, oh yeah, that scanner thing, I'm going to play with it now. So it's like, the point is like, don't try to drink from the fire hose and take it all in.
Yes.
If you trade 0DT, if you trade futures, watch this. That's all you got to do, right? Red bad, blue good. Okay, like, I get it. Don't try to focus on everything. Like, focus on one thing. And if you're new here and you're trading 0DT, like a lot of people are, trading futures, like you got to watch this, because you got to understand how options and particularly 0DT are moving the market, because we just see it all the time, day in, day out. I think you're now a believer in the impact of 0DT as well. So,
oh yeah, 100%. Yeah, like my thing.
Really critical.
Some people ask me, because there are certain days where I'm kind of looking at the trace and I'm like, I don't really see any edge right now with this.
Yeah.
And so people are like, is it worth the money, bro? Like, is it worth the money? And I'm always like, yes, because on the day where we have the search and destroy, and I know where that level is, or we have that, negative gamma environment, and I know we're going to have a bigger move, I pay for the cost of the software in that one day, that one time having it. So yeah, I'm a believer. You sold me.
Well, thank you. And on that point, I struggle with this a little bit myself too, because, as the founder, and I'm always on webinars and things like that, and people are like, I want the trade that right now it's going to make me $1 million. And it's like, the way that this works is it's binary information a lot of times, right? If this, then that. And I don't know which way there's two legs of the condor, right? Are we going to attack the upper one or the lower one? I don't know, but which way does the data start to move, right? Mm-hmm. HIRO goes down. All right, well, we're going to the bottom one. Like, fine. Like, I'm not here to predict that we're going to go to the bottom one. Just show me which way the data is going, and I'll follow that. I know personally as a trader, when I get bored or when nothing happens is when the worst stuff happens to me, because I just start like slinging stuff because I'm like, I'm bored, I really don't have signal, and then I just do a bunch of stupid stuff. And so the ability to say, there's nothing happening right now, there's nothing on the map, there's no real signal, there's no real flow, so I just got to like wait till something obvious shows up. If I can just reduce the times I trade till something obvious shows up in the maps or in the data, then it's like amazing. To the point of the scanners, right? It's like, there's nothing here to trade in all of these names, but gold, super interesting. It's extremely rich options. Okay, I have something to trade there. Do I have anything to trade in Coinbase right now? It's average implied vol and it's average call put values. Like, there's nothing for me. Like, I don't have anything. So, hey, Brent, don't do anything. It's like, it's okay to not do anything.
Yeah, 100%. That's to anyone who trades in any style. That is the most important thing. Is like, there are moments where you have edge and moments where you don't, and just don't do anything in the moments where you don't. You'll instantly improve your results if you only take action at those moments when you have edge.
Yeah, without a doubt. And I've had to learn this also as like the founder, because, a lot of times, again, like we'll have Q&As and people, what do you think about Intel? What do you think about Tesla? And like, I feel like I have to give you some cool insight about it. And I've had to get very comfortable with being like, honestly, I don't see anything. And I'm like, I know you show up to this webinar for me to be like, there's nothing interesting. But at the same time, if I say there's nothing interesting and that's what I believe, then look, that's what it is. Yeah. And maybe I prevent you from doing something stupid. I don't know. Or maybe I prevented you from the best trade of your life. Like, I don't know if that's not the case. But, that has to be the thing. And so, when you're looking at trace, and honestly, when you look at this up here, for example, there's no positions really, right? It's just dead, right? But here we are, like moving back to this strike, right? This big strike. So, is there a trade when we're on the Captain Condor strike? Kind of not really, right?
Yeah. The trade was to get there. Now the trade is to do nothing.
And that was kind of it. And maybe you had this short bias because you're like, the world's going to end right now, dude. Like, this is going to hell in a handbasket. But HIRO bounced. We're at this strike. So at a minimum, you go, I don't have a good reason to be short anymore. Like, that's what I get when I look at that.
Awesome. Well, thank you so much, Brent. This has been amazing. I'm going to try to convince every single person in my community to sign up for the free week. I mean, it's free. It's like, why not? Just sign up and check it out and see if you like it. And so I'm excited.
Thank you. I'm excited. Your community has been amazing. I love people that know the option space and love the short data trading. And so we're excited to meet everybody next week, and you'll have access to Q&As and everything else. And so again, Charles, thanks so much for your time today. And thanks everyone for watching.
All right. Well, we'll see you on the next one. If you haven't yet, you should check out the first conversation that I had with Brent, where we covered the basics, and make sure that you subscribe for access to all our future content.